My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, and try to put this one in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. The averages rebounded nicely today thanks to the newfound hope that the coronavirus is something we can deal with. Meet the new flu, same as the old flu, except it spreads faster and more easily. With the Dow gaining 116 points, S&P climbing 0.47%, and the Nasdaq pole vaulting 0.87%. The latter two closings, record highs. But you know what? You know where the real action was? It was in the highest of flyers and the basics of speculative stocks. And that's what we need to focus on. In part because it's totally out of sync with the coronavirus panic we experienced yesterday, and in part because a lot of the old guys will say, you know what? This is a top. I don't think that, but I'm giving them their due. So what am I talking about today? I'm talking about Enphase. I'm talking about Virgin Galactic, Ballard Power, Plug Power, and countless others that have become darlings for younger investors. You go look at my Twitter feed. Go read Reddit. They're pumping these stocks, in some cases even holding them rather than just ringing the register because they believe taking profits is for losers. Before I get into this, I need to stress that I'm pro-speculation. I think it's good, even essential. Essential to speculate on dicey stocks with just part of your discretionary money mad money portfolio. So you've got the retirement money, which is just completely wrong to speculate on. Then you have a mad money portfolio of a group of stocks. Within that group of stocks, you can have some speculative stocks, one or two. So I won't try to talk you out of trading like this, if only because that would make me a hypocrite. I never would have gotten positive and told you to buy the stock of Tesla in the high 280s if I had a problem with speculation. I wanted to help you try to make money rather than being some kind of hoity-toity purist who believes it's not fair to make money in a stock like Tesla and you can only own an index fund because you'd be stupid. I don't feel like that. That's many others who do, not me. People went ballistic, though, at the time when I recommended Tesla because I was so late. I was obviously chasing. But given that Tesla's up more than 600 points from there, I think I did a pretty good job. It was a pretty good call. I argued that the stock really wasn't overvalued and should stop being compared to the value of Ford Motor. In fact, I told you at that time to wake me up when Tesla's market cap is more than double the capitalization of Ford and GM taken together. Well, wake me up. Here we are. Tesla's now a $168 billion company. GM's worth $50, Ford's worth $32 billion. If you listen to me when I got buying the stock last fall, I think it makes sense right now, since we got past the level that I said it could get to. Now I think it is time. I think you take a little off. You know, a little schnitzel. Leave the rest. Tesla's now reached my initial price target. The thing that's about speculation is that you need to be somewhat disciplined. I would sell maybe as much as half here if you bought it when I said, then let the rest run. Why half? Because Tesla's had a spectacular move. It's up nearly 120% for 2020. And discipline says that when a stock reaches your price target, you have to let some go. You can't just revise that target up like a lot of the analysts do, because that's a recipe for disaster and lacks any rigor. Selling half your Tesla here if you bought it at 280s, and guess what'll happen? Oh, Lordy. You'll be playing with the house's money, which is the best way to invest. You're working with pure profit, so you'll never be the fool. Boy, does that put you in good company, because in the immortal words of those stock sages, and I'm not talking about Warren Buffett and Charlie Munger, I'm talking about the main ingredient. Everybody plays the fool sometime. No exception to the rule. Maybe factual, maybe cruel. Let everybody else play the fool. I didn't go to college to get stupid. So with that in mind, are you playing the fool if you buy Virgin Galactic up here? Oh, my. Virgin Galactic. We got to talk about Virgin Galactic, symbol spice, like spice of life. This one's tough. If you want to go to space and you got a lot of money to burn, well, you got to go Virgin Galactic. I don't think you can get there with the Spirit Airlines. I don't think the United goes. It expects to have Sir Richard Branson in orbit for the end of the year. Good work. They're targeting 115 space flights in 2021. Yeah, space tourism is about to become a big thing. And from what I can tell, it's not an extremely full flight. Now, Morgan Stanley's been incredibly thoughtful in this one, arguing that Virgin Galactic occupies, and I quote, extremely scarce real estate in the publicly traded space economy. No kidding. Last week, they published a piece arguing that the company, quote, might dominate or even monopolize space tourism, end quote. Sounds good. How speculative is this thing? Well, Morgan Stanley argued that the valuation was quite reasonable. When you look at the potential earnings before interest, taxes, depreciation, and amortization in 2030. That's right. They needed to look 10 years out. In a clear day, I can see forever. I saw it with Barbara Streisand years ago. And to justify this thing. And since then, the stocks rallied another $14. Now, yesterday, they published a piece after the stock surged 21% last Friday. This time, they noted that the driver here was a not very important test flight. But that hasn't stopped Virgin Galactic stock from roaring. This thing has made a lot of people look like geniuses. Credit Suisse tried to bring you back to earth on this. They published a piece using a $12.43 price target when the stock was trading at $9 in November, and you couldn't give it away. But listen to this list of risk factors. Quote, given the unprecedented and largely untested nature of this business model and product offering, there are significant risks to investing in SPICE. These risks include lower than expected demand, scheduled slippage of the first commercial flight, higher than expected flight costs, or an operational accident, end quote. Still, that wasn't enough to scare them away. People are very, 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 very excited about this thing. I know this because I've seen Virgin Galactic pumped relentlessly on my Twitter feed and then on the incredible, let's just say, canon of gospel even of stock thinking Reddit. These are bad places to get information. But listen to some of this stuff. Quote, Virgin Galactic SPICE is going into orbit. Have that one for free, Cramer. Oh, thank you, poster. Thank you so much, Jimmy Chill says. Then there's, quote, I'm up 300% in SPICE in like 3 months. Don't you like the like? In like 3 months, thinking about dropping out of college. You know what? Maybe I should. Or maybe get a grammatical lesson. Hey, I got one. Encapsulates all of them. You can't make this stuff up. Wait. Anyway, this one says, quote, I don't know Jim Cramer, but I have a bad case of FOMO and just bought some SPICE. Now, end quote. The amazing thing is the guy made a killing. I mean, if he rang the register, he made a lot of money. But do you think he did? Listen, for all I know, space tourism could turn out to be a real industry. But for heaven's sake, if you own Virgin Galactic, hey, the FOMO guy and the guy who's thinking about dropping out of college, don't quit your day job either, Chief. I think you ought to ring the register on some of this stuff. I don't get greedy. And believe me, I'm telling you, thank me. You don't have to do it all, but just some. And look, it's not just this one stock. You got Enphase Energy. It's up by a cool 42% today. Why not? This is a company that makes microconverters for turning solar power into electricity. Enphase just reported a true blowout quarter, $210 million in sales, 2.1 million microconverters shipped, $52 million of net income. No wonder the stock caught fire. Now, you know what? I mean, I know this one's not done going higher. I would still trim a little, but I think you go higher. You see, anytime you see anything positive in solar, you also get the fellow travelers like Ballard Power and Plug Power. You're never allowed to say a bad thing about those. They always advance this kind of news. They are hydrogen fuel cell companies that have been losing money for ages, yet no one can resist them when something good happens in alternative energy space. If you own them, once again, I recommend ringing the register after these moves, but I know you won't. You'll just hate me. That's okay, too, because I be Jimmy Chill. Of course, they aren't all full of hot air. Solar Edge Technologies is killing it worldwide with this innovative equipment. They're having a hard time meeting demand. High-quality problem. Hey, if you want to bet on some sort of solar pin action, I would stick with the real solar companies. And then there's the very best, the worshipful, the golden calf, the Dothan in the Ten Commandments, the Edward G. Robinson, he worshipped. Yes, I'm talking about Tesla. Tesla itself, with a solar business that was supposed to be a millstone, even an albatross around the company's neck. Turns out it's incredibly exciting. When you combine the Tesla solar solutions with the new batteries that Musk intends to come up with, you have the possibility of a car that can run absolutely off that electric grid that is powered by 28% coal and all that nat gas, all the things that you and I hate if we keep the Earth as a stakeholder. Those batteries might not even need that much charging. I mean, can you believe this? When will we know more? At Tesla's quote-unquote Battery Day, which is on some undeclared date in April. I bet it'll be nuts. International Battery Day Call me in. Get me StubHub. Okay, look, I know these speculative stocks are all very exciting. They're a lot more interesting than something like Cramer Family Fave, Okta, or Broadcom, Salesforce, NVIDIA, let alone, I'm not kidding, they're even more exciting than RingCentral or, get this, Zscaler. But here's the bottom line. If you own a speculative stock that shot through the roof today, please take something off the table. And you know what you got to do? You got to go buy yourself a beautiful cashmere sweater. As my mom always said, you had to do after a big win at the Ponies. That way you'll have something to show for it if these high flyers give back their gains. Philip in North Carolina. Philip.
Thanks for taking my call, sir.
My pleasure.
I've got a sizable position in Cedar Fair. I've owned it over 5 years. This morning's earnings report was record-setting in all respects. How do you feel about it, sir?
Cedar Fair is a first-class operation, and against that, I would say Six Flags is a sixth-best operation. I think that the people who run Cedar Fair are going to do a good job. 6.8% yield, I like it. What is that song? Oh, my. There we are, the main ingredient. I thought it was that thing that Buffett and Munger put together, but it turns out, no. Okay, I get it. It's exciting to watch our high-flying spec stocks take off day after day, isn't it? Discipline says maybe some ka-ching. Mad tonight, Wingstop's dropping after earnings. Does the company need a wing and a prayer? Or is there a nugget of hope for investors? Talk with the CEO. Then the way we shop, buy, and pay is changing. So can the payment processors turn plastic into cash? I'm going off the charts to find out. And as the coronavirus outbreak continues to be cause for concern, I'm eyeing one company that's working to guide organizations through the crisis. Don't miss my exclusive with, yes, Everbridge. Stay with space, and stay with Space and Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.